Hey everyone, Tommy V from 81 Real Estate. We got another podcast episode here with another amazing guest speaker. This is Jessica Khani. She's a lender out in Denver, Colorado. She used to be a physical therapist, kind of made the transition to do full-time real estate. She's friends with Dave Williams that we had on the podcast last week. And she already did part one of a webinar for real estate investing for healthcare professionals, which is obviously what I'm very passionate about. And part two is coming up. So I figured I'd have her on to talk about some real estate topics and then promote part two of the webinar. So yeah, take it away, Jessica.
Yeah. Thanks so much for having me on here. Super excited to connect with you and, just chat about all the things that we're passionate about, which is investing in real estate. I think you got turned on to it because you started investing. And my story is very similar to that too. It's always been ingrained in my mind, buy, don't rent, buy, because my parents were investors on the side. I bought a house as, the first time I had income. I mean, right when I graduated from school, I was like, I want to buy. And the mortgage payment, typically when you buy a home, the mortgage payment is a little bit higher than rent, depending on where you live and a lot of other factors, into that. But, I knew I wanted to buy and not pay somebody else's mortgage and then get roommates to help out with paying my mortgage. And, gratefully and humbly, like that helped us to get where we are today, where we were able to save a ton and, purchase and more real estate and then build our portfolio. And, we'll probably get into a little bit more, but that basically set the stage for not only financial security when I got injured, when I was in physical therapy, working full time. And I realized really quick that I can't care for other people and provide the care and work and earn income, like earn active income, unless if I'm 100% healthy mentally and physically. And it wasn't, I'm okay. Everything's fine. I've recovered from my injury, but it's just doing the Colorado things I love that, you crash on your mountain bike or whatever, and so I'm young and healthy. Like at the time, I think I was like 27, and it's like, man, like if I'm young and healthy and I can't even earn income for myself. But luckily at that time, I had already been investing in real estate and I had that passive income to help support me through that time. And so it just quickly turned me on to like, hey, I need to share this with other people. Like people are not talking about real estate. They're not talking about investing and, the financial security of it. Everybody just kind of ingrains in you, like, get a great job, get something that's going to pay you well, which physical therapy is
Middle of the road.
Well, I'll just leave it at that. Arguable. And I was an outpatient, which, of course, if you, I know, yeah, exactly. It's bottom of the barrel. So, especially in Colorado and Florida, I could have done better for myself, but I couldn't stand the hot summers. But all that to say, it's you kind of shift your mindset to I'm just going to continue to try and trade my hours and my time to earn more income that is then taxed, at your FICA, your marginal tax rate, your Social Security taxes, your Medicare taxes, all those things. And how much are you really taking home at the end of the day versus can you earn passive income in real estate? And how much, how much of your time do you have to trade to earn a net amount, and how much would it take to earn that same amount with real estate that could potentially not be taxed or be taxed at a significantly lower rate because it's passive income? And I'll say here, I'm not a CPA, but it's just my experience and what I know and have learned.
Not
So
legal advice either. We're not lawyers, but yeah.
exactly. So consult your own CPA for your individual situation. But, it's just one of those things where it's kind of like work smarter, not harder. Because if you only trade your time, you only have so much time. You can only work so many jobs. And I'm a huge fan of hustling, but, just make it worth it. So I think it's just, very important conversations to have. And I love that you're so passionate about sharing this with other people too, because it's changed your life.
Yeah, absolutely. So just, a lot of the people on here already know my story, but just brief background, that my parents, they went on the new construction craze and they followed the trend and they built a house in 2006, right before the Great Recession. So their $180,000 house that they built, new construction, was suddenly worth, 100,000 when everything crashed. So instead of taking that loss, they said, you know what, why don't we just kind of keep it as a rental? So they became accidental landlords, kind of keep it as a rental. And they bought the house that I grew up in off of a short sale. So someone else, they got their house at a discount. So they did move out, rent behind, became an accidental landlord. And that's actually still in our portfolio now. That house is appreciated from 180,000 all the way up to 360,000 now. And so we'll be looking to sell that pretty soon here. But so I got a little bit of firsthand experience at that point. And then 2013, my dad passed away from cancer and left my mom as a single mom with 6 kids. At that point, I was 18 and my youngest sibling was 18 months old. And so we knew, my mom can work a little bit. She's a nurse. She did home health nursing. It's like my mom can work a little bit. She's a single mom. We got to figure out some other revenue streams here and he did leave us some life insurance money, a modest amount, but you can't just spend life insurance money. You got to create assets that generate income. And so that's what sent us down the path to start investing in real estate. And so, yeah, when you think about kind of that future planning, what if I'm injured or what if there's a big life change, what are you leaving for you, for your family, for your kids, kind of going down that path. So let's kind of back it up a little bit to you're working in the clinic full time. And right now I'm doing home health and Dave was doing home health, which kind of helped him transition into real estate. You were working in the clinic full time. And do you think someone working in outpatient ortho do you think that would be really a barrier time wise being able to start with real estate?
So it depends on what kind of real estate you're talking about. If you're talking about, I'm going to switch careers and become a real estate professional, yes. If you're talking about, I mean, that's the truth, an outpatient, because I mean, I could answer my phone unless if I had to cancel, which you can't bank on because it could get filled. Unless if I had to cancel, I could only pretty much answer my phone from like 1:15 to 1:45 on my lunch break, because you carry patients over if you go to the bathroom, God forbid. And then, you're working late. I was working till like 7:30 sometimes. So, as you kind of push your patients back throughout the day and then documenting. So if you're a real estate professional, certainly it would be hard to do what you're doing right now because you have to be answering, on the fly throughout the day, scheduled meetings, all those things. Obviously, healthcare, home health was a little bit more flexible for Dave. For me, investing in real estate, I started investing in 2019. I didn't leave PT until 2021. And when I left PT, my last day was on a Thursday. My first day in the real estate industry was a Friday, of course, because that's just how I do things. But, I think it's good to clarify career real estate professional versus real estate investing. So you can invest in real estate.
Right. It doesn't have to be an all or nothing switch.
Exactly. And that's something that I actually get that question a lot from people who want to invest is, can you invest with a full-time job? And my question to them is, can you plan a wedding with a full-time job? Because I think investing in real estate is a lot easier. Yeah. So it just depends. I mean, and I'm a little crazy. Like I will fill every free second I have. I mean, even last night, we have a project on our primary we want to start, my husband and I. And we were planning to start it this weekend, and he comes home at 7 p.m. and from work, because he's still in PT, he's transitioning out right now. But he's like, hey, let's just start on this tonight. So we literally started ripping out carpet at like 7:30 p.m. because it's just like, well, we have the time, why not? So not everybody's going to do that, and that's fine. But I totally think that you can start investing in real estate. And since I made this switch, at the time I was only 3.5 years into my PT career. 3.5 years into my PT career. So, it was very early. Like people at that stage were not burnt out just yet. And I was kind of thinking like, and my husband wasn't burnt out. My best friend who's in PT, who's here in Denver and went to school with me in Florida, he wasn't burnt out. And I'm like, what's wrong with me? Why am I so burnt out and they're not? And, I try to do everything to make it work, but it just was not working for me. And I was like, this is not sustainable. So, and then it's interesting now that we're a little bit further along, so many of my classmates, so many other PTs I've talked to, and just other healthcare professionals, I mean, dentists, physicians assistants, nurses have reached out about transitioning out. And my advice to them is, if you're going to transition out, start investing now. When you have that guaranteed income, when you have a salaried income, when you can use that to purchase real estate and then to cushion you as you make the transition. Because if I hadn't started investing before that and I had made the transition, essentially I'm self-employed right now. So I had to build up my business. Right. And you want to have reserves on the side. So that's just my advice to anybody who switches. And I'm always happy to have a conversation with somebody, about their individual situation. But, I get a lot of those questions. So that's just something that I don't think I would have been able to make the switch into a career that I'm, I was passionate about PT, but that I'm passionate about and also fits my lifestyle and is more sustainable for me long term and has a greater growth trajectory with how hard I work,
Exactly.
versus
It's
essentially being
like I don't mind working hard and I don't mind working harder, but would you rather work really hard and get an extra $1,000 a month, or would you rather work that same amount and maybe get $10,000 a month down the road? And it's just like, what does that trajectory path look like? And
right.
unfortunately, with time, it's always linear. More time, more trading your time for money, it's just linear. But then with the real estate, it can be more exponential because
Right.
the benefits start to compound over time to where your effort is being rewarded more greatly.
Right. And then there's the passive side of it too. I mean, you just speaking about your mom's, your, even though she bought right before, she bought at the height of the market. And, even though she bought then, over time, her property has slowly appreciated. And I'm sure you guys have put some work into it, but it's just over time, that's what it does with inflation, the natural appreciation of it. And so, that's passive versus like how many hours am I going to trade? And at the time, like I had been in PT for 3 years and I had 65 patient appointments a week. I was incredibly burnt out. I know it was crazy. On my busy day, I was seeing 19 patients a day. It was awful. And I'm like, and I got, I don't even want to say it. It's such a slap in the face, but like, I got over 1 year, my base salary raise was $1,000 over the whole year. It was crazy. And, and I asked for 2 mental health days, 2 mental health sick days. And my employer told me no. That was before COVID. So it was before a lot more awareness around it. I don't know what they would say now. And I have a lot of respect for them, but it's a grind.
Yeah, it's just because those margins are so thin that either you got to make your patients worth more or more volume. And so sounds like that clinic was going for the volume play. Um, and it's just hard. So kind of one thing that if people are looking to transition out of doing healthcare or kind of that motivating factor, I feel like what's keeping a lot of people tied to their job is, oh, I spent all this time on this degree, or I spent all this money on this degree, or I have these huge student loans. Do people tell you that with those kind of complaints of like what's kind of holding them back, keeping them tied to that? And that just like exacerbates the burnout because it's one thing to feel burnout, but then it's another
Yeah.
thing to feel burnout and trapped.
Yeah. And that's something that I had felt, guilt around for a while was, I've invested so much time and effort in this career. I wanted this for so long. I've worked so hard on it. I've, financially spent so much on it too. And when you actually look at, I didn't know this until recently, but if you actually look at, there's a lot of studies on burnout in healthcare because in 2022, May of 2022, the US Surgeon General sent out an advisory saying that this is a national crisis, the amount of healthcare workers who are leaving. I mean, it's projected that 75% of healthcare workers are going to leave the field in 2 years. And that's across, I was shocked because I was like, man, I'm so burnt out as a PT. The highest level of burnout is nurses and physicians. And I was like, man, I thought they had it good because they got paid more than me. But at some point, the monetary value doesn't change how burnt out you are. But, speaking of like, I've invested so much in this, should I switch? The thing is I still have my education. Nobody can ever take that from me. And with that mindset, it's like, okay, if you've invested so much, at what point do you need to keep, like, is it worth it? Like, do I need to stay in the field for 4 years to break even on there? Like, make sense of that? Where like, then you look at investing in real estate, our very first home that we purchased and then sold, gratefully and humbly, I say these numbers not to flex. I say this because I think it's important for people to talk about these things, but that one sale, not even including cash flow, paid more to me than working 3 years in physical therapy net. Like that is mind blowing. So it's like going back to, do I need to stay in the field a number of years to reach a monetary return? Or, do I need to stay in this career for forever because that's what I wanted to do? Like, you know what I mean? Like people change,
Yeah.
your lives change, and looking at it, it was like, this just does not align with our goals.
I definitely think that there's really a split. When we look back in history, there's really going to be a split of before COVID and after COVID
Mhm.
for the healthcare professional community. Ooh, yeah. It's so like I graduated in 21, so I was, a little bit late to the COVID party, but I worked on COVID ICU, COVID med surg floor, and going to work and coming home with a pregnant wife, a newborn. My newborn got COVID when she's 11 weeks old. And she
Mm.
went with the N95 glass face shield all day long in the hospital.
Oh,
And so, I've coworkers. I have an OT friend that did it for 10 months straight in Pennsylvania. She did 10 months straight, all day long, COVID.
crazy.
And it's just like, ooh, it's tough. And so I think that it's not that we're not willing to put in the hours. We're not willing, it's not that we're not willing to put in the work. It's just what's the return on that going to be over the long haul. And so I feel like
Right.
you said the healthcare community is really taking a hit. And so we got to explore these other options. We got to bring more awareness of saying, hey, you don't, there's other things out there. There's other things you can either switch to or you can use in conjunction to what you're doing now. Because
Yeah.
you feel tired doing your job, but you know you have real estate working in the background. That's a much more motivating, and that you're using your W-2 to sponsor your long-term goal of real estate investing. That's a mindset shift that can help offset that burnout. You say, hey, I'm working hard, but I'm building this asset.
Yeah, totally. And that's something too that, I should say, and when I switched in 2021, when I switched careers, I had already dropped down to 32 years treating at that point because I had, I knew I could. I had my real estate that, that was providing additional supplemental income for me. So, I'm not hosting these classes to tell people you need to leave healthcare. I'm hosting these classes to help one, just educate other people and help them. And also, I'm just so passionate about real estate, like yourself. Like,
yeah.
you believe it or not, like before I even got in the industry, I talked about real estate just as much as I do now. Like, ask any of my friends,
every
yeah.
single every single one of my patients for the past 3 years, they all know how to renovate a house. If you
Yes, and that's so great
you get
because
a total
people
knee replacement, you're with me, you're gonna be a real.
I love it. And that's just the thing is you just when you find something great, you want to share it with people. And gosh, I remember even like on my bachelorette, like telling like kind of like after a few drinks, like telling my girlfriends, like, buy real estate. You're so young. And like I'm so happy for them. Like I've got a girlfriend that she bought her first house at 25. She's younger than me and like she's crushing it. Like she's gonna do so great. And like she wants to retire early and she will be able to because that mortgage is gonna be paid off at 55 years old and she's gonna that's gonna provide her a heck of a lot more than social security will if it's a thing. So
Yeah, so kind of so your story, you bought a house as soon as you had income, you had roommates. I did the same thing. I graduated from undergrad and then actually got my house off seller financing and then refied it into a 30-year fixed debt. But I also had roommates and it was my mortgage was 492. It was
that's amazing.
492 a month, and I had roommates paying me $300 a month. So I
That's
was
crazy. So you're cash flowing. Yeah.
so it's cash flowing right out the gate, and then of course I went to PT school. But I think that kind of the easiest path to go off of 0 to 1 is to obtain your own house. And so whether
Yes.
it's obtaining your own house to live in, and then you plan to move out and then use it as a rental behind you, move out, rent behind, or if you're
Yeah.
gonna buy it and then rent out the other units or rent out the other rooms or rent out the basement or to kind of create that additional cash flow. Do you think that's kind of a good strategy for people to use?
That is going to be so yes. So that is the easiest strategy to quickly stack properties is to move into a home, purchase it as your primary, which means that you are going to occupy the home. And then you can secure the lower down payment, lower interest rate, easier terms, overall, like more flexibility in terms of getting pre-approved for that home and then moving out and doing the same thing. And that can look at however you want it to be. I have some people that they're like, I want 5 properties in 5 years. I am moving every single year and that is fine with them. Some of them are single, some of them they've got their spouses or partners on board. So, of course you have to work with your family on that. Personally, I wish I think I hustled as much as I could. I almost wish I hustled more when I was younger. So that way I could just like quickly stack. But I say we probably not intentionally, but we end up moving every 2 years. Our last house we thought was going to be for our forever home. And then come 2 years, it's like, oh, we want to change something. So, now it's a rental and it's just, it's appreciating. And then it's also providing cash flow in the meantime and fully covering the mortgage and, on top of that too. So yeah, I think that's the quickest way, of course, nobody's like, oh, I want a roommate, like sign me up, but at the same time, when somebody's helping you cover your largest expense, your living expense,
Exactly.
and you're also benefiting from the appreciation, you're living in an appreciating asset, there's a comfort and profit spectrum. you know,
Yes.
you always like, and usually the further you go on the profit, the less comfortable you are, the more comfortable you are, the lower on the profit. So, for us, it was like, okay, humble yourself for that first house, get two roommates. At one point we had three. I mean, it was all friends we were living with, and we love them. And actually it was during COVID and it was so fun because when you couldn't travel 10 miles away from your house, everybody was at our house already. But, it was, that helped us to get where we are today. And, we wouldn't be here without that. And then when we moved into our second, like forever house, which was not our forever house, it was like, man, we had to pay this whole mortgage by ourselves.
Yeah.
So then we started renting out to travel nurses, and so there's a
Yeah.
lot of different ways that you can do it. And we loved each person that stayed with us. It's kind of fun.
Yeah. So a lot of people they don't have a large down payment. Like they say, like, oh, I gotta get 20% for a conventional loan, like that's gonna hold me back. But I know at least for Florida, I
Yeah.
know you're licensed in Florida, so you can probably speak to it better than I can. But I know in Florida, if you don't own a house or your personal name isn't tied to a property, we have the Hometown Heroes program. So for any of our healthcare workers, physical therapists, athletic trainers, nurses, OTs, doctors, dentists, all those people, it's 25,000 in down payment or closing costs that kind of stacks on top of your loan. And if you're only going 3.5% down, that 25,000 can go a long way.
Yeah, yeah. So the Hometown Heroes is a really great program, and there's a ton of different down payment assistance programs. Each state has their own really great ones. The Hometown Heroes is one of the best ones that I know of. I mean, nationwide too. I mean, even in Colorado. But of course, like you said, you have to be a hero, and they are very big on, like you have to be local. You have to be like for some nurses, like you have to be licensed in the state of Florida, not just nationwide kind of thing. So those are all things that, yeah, like I look through the guidelines of those, but yeah, like you said, it's up to 5% or 5% of the loan amount, down payment assistance, and it helps cover your closing costs too, up to $25,000, which is huge. I mean, to take advantage of. And their program, go ahead.
Pause.
Yeah.
I went to school here in Florida, so my education isn't great, but 25,000, 5%, that'd be $500,000 purchase price.
Yeah.
Yeah, so that'd be a pretty, you're not looking at like a trailer park with that price point. That's
No, yeah, it's significant. Right. And then, you mentioned the minimum down payment. So nationwide, as a first-time home buyer with conventional financing, you can put down as little as 3% as a first-time home buyer. As a repeat buyer with FHA, you can put down as little as 3.5%. And then even repeat buyers with conventional, it's 5%, so it's still very minimal. It's
we're
very
talking
attainable.
if no down payment, no loan assistance. I mean, 3.5%, you could be in the neighborhood 10,000, 10,000, 15,000 down,
Yeah,
depending on your scenario, your underwriting,
for
everybody
sure.
situations.
Yeah.
But we're not talking about like 50, 75,000. We're talking like 10, 15, depending.
No, and the thing is like everybody knows the hardest part about purchasing your first home is the upfront costs, right? Because if you haven't been a homeowner yet, you haven't benefited from the home equity and the appreciation. So most first-time home buyers, they are putting down, I think the average in 2022 for first-time home buyers was 7%. Most repeat buyers are putting down 20% easily because they've benefited from owning a home and letting it passively appreciate. But the thing is like when you're buying your first house, and this was certainly the case for us, it's usually not your dream home. And I'm sure it was it for you?
No.
Yeah. Yeah. The point is just get your foot in the market, quit paying your landlord's mortgage, and benefit from that passive income, that appreciation, because the thing is like even though it's a competitive housing market right now, the date is May 11th 2023, for if anybody's listening to this in the future, it's the rental market is equally competitive nationally. Rents go up 4 to 5% every year. I know in our markets, both in Denver and in Florida is even more insane. I mean, the rents that have gone
Yeah.
up, I've got a friend in Miami that her rent went up. Her rent renewal was $800. That is a rent in and of itself.
Yeah. So I'm a big fan of the Rent-O-Meter. I have their pro plan. I have a referral link if anyone wants to get on the Rent-O-Meter. But in Florida, year over year, currently a 3 bedroom. I don't know if it was, I think it was 3 bedroom single family home. Miami went up 30%, St. Petersburg, Florida went up 30%, and Tampa, Florida went up 28%.
It's insane.
Orlando was like 18, and then Jacksonville was like 3%.
Right.
It's like, yeah, renting is not cheaper than getting a house right now, even with the
It's
high rates.
Yeah, it's not cheaper and there's no stability. I mean, if you ask people, and I ask people this in the classes that I host in my first time homebuyer classes, how many people had to move last year because the landlord wanted to sell because the market was so hot? How many people's rent went up this past year? How many people had to move because of that? And every time you move, how much are you losing after your security deposit? How much do you spend in your application fees? So when you start to add that up, what's the financially smarter decision?
And you don't have anything. You don't own it.
You don't own anything. And, of course, there's so many objections to, I mean, there's so much in the media. I mean, since 2015, the media has been saying the housing market's going to crash, it's going to crash. And if you've been waiting since then to buy, I'm sorry for you, because you've been missing out.
Yeah, you
And
missed the wave.
yeah, yeah. And then so there's so mmany naysayers about, in life, there's always gonna be naysayers. And especially I find that it's, typically when that person doesn't know what they're talking about. But you hear people say like, oh, interest rates are higher. Like, yeah, interest rates are higher than when they were artificially suppressed during COVID and they were 2%. And if you're holding out for 2%, again, like please call me when they drop down to 2% because they're, they won't. But rent is 100% interest. So which one's the higher interest rate? you know,
Either you're paying someone else's loan or you're paying your own loan. So
you're
like,
still paying somebody else's mortgage. Either way, you were literally every month when you were paying rent, you were paying into somebody else's bank account, and it's the form of home equity.
yep.
Yeah.
Geez. All right. So we talked about your story, talked about how we got started. Most people should just get in, go from 0 to 1. There's tons of loan buyer programs. FHA is a great option. What about the people that do like the duplex, triplex, or quad, live in one unit, rent the other units? Obviously, some markets like Jacksonville, there's not a lot of multifamily units to buy. It's just not in the market. But now that we're down here in Tampa, there's multifamily everywhere. So that's kind of something that I've been working with you to try to kind of iron out, see if that's even possible,
Right.
see what the numbers look like. Obviously, because the rent is inflated here, that should I'll be able to use the market rent from those other units to help qualify for the loan, which is pretty powerful.
Right. Yeah. So a few things about that. So that's just a different type of house hack. And I feel like it's, for the purposes of this, it's helpful to define what a house hack is. I didn't know that term when I was like, I want to get roommates. I just knew I wouldn't have roommates to help me cover my mortgage. But house hacking is basically where you are renting part of your home, whether you're renting your covered garage or whether you have a roommate living in your house renting out a bedroom or, a storage space that's heat and air controlled. Or if you have a multifamily where there's, you want the separation, you don't want somebody else sharing the same kitchen as you, but you have somebody next door, they're paying rent, that's covering some of your mortgage for the whole property, and since you're moving into that house, you're getting the lower interest rate, you're getting the lower down payment, and hopefully that would cover the full entirety of your mortgage. So that way you're completely living for free, but that's just a different form of a house hack. So it's a really great way to do it. I know a lot of people who are looking for multifamily, such as duplex, triplex, of the sort. Um, the price point is higher, right, than a single family home. So that creates a burden. Like so many people come to me and they're like, I want to buy a duplex. And I'm like, that's great. Let's shop. This is how much you qualify for. And it's not as much as that. But the beauty is that you can, if you're purchasing said duplex with one unit that you're living in, one unit on the other side, you can qualify some of the income of the other side. So that helps out your debt to income ratio compared to with a single family home. You can't necessarily do the same. If that's not enough to get you to where you want to be, what I would say to that person who's trying to create a house hack but doesn't want somebody sharing a kitchen with them, but they want some separation, there's plenty of houses out there that, is there like, can you create a wall and put a door, and separate part of it? Is there an exterior entrance? I know Florida doesn't have basements like Colorado does, but a lot of people here, they have an exterior entrance to the basement. They create a separation and they're short-term renting their basement and they're having their mortgage completely covered or renting out long-term, whatever it is, and you can do the same in Florida. So there's a lot of different ways to get creative.
It doesn't necessarily, it would be nicer and cleaner for it to be a true multifamily with like separate meters. But yeah, like an additional living unit, a mother-in-law suite. Can you throw up a wall to change the floor plan? Yeah. So all of
Yeah.
those are all really, really creative ways. It doesn't necessarily have to be a true multifamily property there.
Yeah, yeah, and I know plenty of people that their cost to making it separated is literally just putting a door in. Like that's it. So it
Yeah.
really
So
just depends on what you're looking for.
you definitely keep that on the radar. I know I was messaging with someone that has a 2 bedroom and it's like 1,400 square feet. And it's like, okay, well, could that be turned into a 3 bedroom or a 4 bedroom? Like sometimes you have to think outside the box with some of that floor plan stuff.
Yeah, right, exactly. So again, just going back to that comfort and profit, do you want something that's turnkey, ready to move in? Are you willing to like make a little bit of change to, get you a little bit more profit, whatever it is? But I think, most importantly too, what I would say to newer investors, who are trying to get their feet wet, trying to get started, there's so many resources out there. And now with the internet, I mean, we're connecting, we found each other over the internet and it's amazing, and so just reach out to people who have been through this path ahead of you, who have learned, from their mistakes, and let them pass on their mistakes to you, because those people have had mentors before them too, and so you're going to get somewhere a lot quicker by doing that instead of trying to navigate it on your own. So
Absolutely.
that
Save
would be
time,
my advice. Yeah,
compress your time, learn from others'
yeah,
mistakes. Just do
yeah, exactly.
on your own.
Yeah.
Obviously, I'm trying to create community network education for healthcare professionals. I know you're trying to do the same as well. So like I said, you already had part one of a webinar and you've part two coming up. So what can you tell us about that? What's gonna be on the docket?
Yeah, so part one, we kind of just went over, the statistics on burnout in healthcare, why specifically it's so important for healthcare providers as a profession to be investing in real estate. And then we went into, the value, the power of real estate, what you could look at, what you could expect to receive conservatively. I always give people conservative numbers just to set them up for success. I would never go based on crazy numbers. So I take 2021 and 2022 out of there. But what you can expect to achieve, in wealth growth 5 years down the line, 10 years down the line for one property. And then if you're able to stack properties, what does that look like for you? Can you replace your salary completely where you choose to work, or you have extra spending if you want to travel, or if you want to leave your job, if you as a cushion for retirement, whatever that may look like. That was kind of part one. It was taught by me and another physical therapist, and then also a dentist who he left his career full time too to invest in real estate as well. So just kind of interesting, like we all took different ways, different paths of leaving our career full time, and it was all for different reasons, but very similar in the sense of like we want to create financial security, we want more growth, all of that. So that was the first part. The second part, the second webinar, we're going to kind of more break down like how do you get started on a very high level, and then of course we're always available for like individual questions and to set up a plan. But how to get started in terms of like what's step one, educating yourself, then determining your financing, because that's going to help you understand what you can get, picking a strategy. Do you want to do short-term rentals? Do you want something more hands-on but is going to cash flow more typically, or do you want long-term rentals where you can just be pretty hands-off and you're pretty much involved with tenant turnover and then a call every now and then, but really not that much as long as you screen well, kind of thing. So or do you want to leave your career full time to become a real estate professional, flipping, whatever it is, and that's where you talk about that strategy, and that's where it really helps to have a great team. And so we just go through each, kind of step by step, getting started, setting your goals. And then, last class, I would say too, we talked about the benefits of real estate. And I'm not going to go into like the nitty gritty of it, but just talking about the appreciation. So again, not going off of 2021 and 2022 values, but even, nationally, if you look at historic annual appreciation before, the crazy appreciation we just saw these past 2 years, it's 3.6% annually. So if you look at, using that example of the $500,000 home, at 3.6%, you're passively gaining over $15,000 a year in income. So going back to, and that's conservatively, your market, Florida, is way better than that on average annually. Denver is a lot stronger than that. Denver's double that, not annually. So on average before 2021. So, I just being conservative. But then when you look at, take that same $15,000 that you earn passively just with your house sitting there, that's not even cash flow. That's appreciation. So that's just the natural increase in value of your home over time. with inflation. And then if you compare that to your active income, how many hours would you have to work to earn that same $15,000 net after Social Security, after Medicare, after FICA, after your marginal tax break? You know what I mean? It's like, man, that's just making me tired thinking about it. So, so we kind of go through the depreciation, the cash flow, the principal pay down, just all the benefits of real estate. So we do have a recording of that. So if somebody does want, that recording, I'm happy to provide it, or I don't know if you can provide it in your show notes.
Yeah, absolutely, absolutely. All right, so kind of in kind of the same thing of barriers to entry, we kind of talked about having a lot of cash, down payment, how there's different assistant programs, how you can do house hacking to maybe get into a little bit larger, a little bit nicer property to lower your housing expense. And then down the road, you would move out and hold it as a rental. I know one barrier that I thought was, oh goodness, I have all these student loans. If I've, $100,000, $150,000 in student loans, why would a bank then give me a house loan on top of that? How do you experience people asking you that?
Yeah, all the time. So that's another big one that I hear. That's probably after people thinking that they need 20% down payment. That's probably the second biggest misconception that I hear is, I have a ton of student loans I can't buy because I can't qualify with all these loans. And it's amazing the number of people, that have closed on homes that have over $200,000 in student debt. And the reason being is because we just have to count your monthly payment, and it's a percent of the balance, depending on what investor you're working with. But really, as long as you have a good income that's offsetting that debt, and a lot of people, they don't want to max out their debt to income ratio anyways. So
Right.
the debt is not even coming into play, because if they're not maxing out all the way, they want their monthly payment to stay lower. It doesn't even factor in. So that's just something where it's really helpful to, just talk with a professional and like a lender like myself. And I mean, seriously, like find out what you qualify for. Because if you're telling yourself, like, I can't do this, I can't do this for something that you haven't even found out for sure, you're just holding yourself back. I mean, I had in February, I had a physician's assistant that she's 40 and she thought she could never buy a home. And she's closed on her home now because her friend who's a PA and just became a realtor was like, you really should just find out what you can qualify for. And I talked to her in December and she's closed on her home now. So it's something where it's like, and then speaking to any barrier, there's barriers to home ownership always, there's no barrier that we have not encountered. So there's always a solution to something, whether it's credit, whether it's debt to income, whether it's, student loans, down payment, whatever it is, there's a solution. So,
Yeah, I think in the biggest thing with that is just finding someone who's dealt with that before and can advise you what to do.
yeah.
So finding a great loan officer like yourself, and other people in the community to help guide you, say, hey, oh yeah, I was there, and this is what we can do to get around that. There's
Yeah.
no obstacle that is permanent and impassable, and you're not almost guaranteed you're not the first person to encounter a particular
No,
real estate item. There's going to be
no.
someone out there that's dealt with.
Somebody's dealt with it in the past. And, the thing is too, like, yes, student loans, they can be a barrier, for some people, but at the same time, you look at the flip side, and I know you've talked with Dave, and, he certainly has a lot of student loans from going to a private physical therapy school in undergrad too. But at the same time, he didn't let that hold himself back. He purchased a home and is going to sell that home soon. And that home, that one single house, is going to pay off all of his student debt. So, at the flip side, it's like, what can this do for me to overcome that barrier instead of I'm going to let that barrier hold me back?
Man, I love that. How is it gonna, if you focus on the benefits, you can make it happen,
Yeah.
especially the
Yeah.
benefits over time.
Yeah.
Cool. Well, thank you so much for your time, for joining us on this podcast. Definitely enjoyed this discussion and really hope to have you back again, because we didn't even get into the nitty gritty about like CPI and inflation and mortgage
Oh my
rates and
gosh.
all that stuff. So we'll have to do more of a deep dive on that on a different episode. But if
Yeah,
people want to
definitely.
find you, what's the best way for people to find you?
So you can always reach out to me by phone. I do try to get back really quickly. I don't mind sharing my phone number on here because that's just, in this role, that's what you
Business.
do. So my number is 314-265-0642. You can always follow along on Instagram or Facebook. My name on Facebook is Jessica Khani. Khani is my last name. And then my Instagram name is Homes with Jessica Khani. My name is spelled Jessica Khani. And I'm always here as a resource. I've had plenty of people, I'm sure, just like yourself, like you've mentioned, who have helped me to get where I am. So I'm happy to help, whoever it is to get where they want to be.
Perfect. And Jessica, I showed her the Discord. She's interested, so we might be able to get a legit professional loan person in the Discord. I know people have been asking a lot of lending questions, and I can give my educated guess, but she'd be able to get a lot more concrete and probably even set up a consult to answer more specific
Yeah.
questions. So, again, thank
Yeah,
you so
that looked awesome. I can't wait to
much.
check it out more. And thank you so much for your time today. It was such a good conversation. I appreciate you having me on here.
Yes, ma'am. All right. Be sure to go find me, 81 Real Estate or Tommy V DPT, and look forward to connecting soon. See ya.
Thank you.